I wasn't awake, but I've looked at the chart, and then it traded in a matter of 1 or 2 hours to 30.61. So an almost 9% rebound. And I think that's very strong and very significant. Gold as well. We traded to 29.70, and then during the same time frame as silver, it rebounded up to around 30.60, which is about a 2.8% rebound. Of course, is not as much as silver because gold has held up really well. It's still up about 15% year to date, while silver now is probably up slightly, but it lost 16% last week
Just after midnight London time, silver briefly dipped to around $28.30 before sharply rebounding to $30.61 within just a few hours, a nearly 9% surge. That kind of recovery is both impressive and telling. Gold also experienced a rebound during the same period, rising from $2,970 to approximately $3,060, representing a 2.8% gain. While gold didn't move as dramatically, likely because it has been much more stable and is still up around 15% year to date, the key takeaway is how quickly silver can move when momentum shifts. Silver could surge higher when the next major rally kicks off, potentially outperforming gold significantly. Mario Innecco, a financial markets and macroeconomics analyst, explains that silver and gold both experienced sharp overnight swings, with silver dropping to $28.30 before surging nearly 9% to over $30, and gold dipping just below $3,000 before rebounding to around $3,060. This sudden recovery, what some call a slingshot move, highlights the remarkable resilience of these metals in the face of volatility and rising concerns in the financial system. With growing signs of stress in the banking sector, a weakening stock market, and possible emergency action from the Fed, investors may be flocking to gold and silver as safe havens. Add to that mounting concerns over heavily leveraged private equity and a tumbling global market, and it's clear we're in a fragile environment, one where gold and silver could shine even brighter. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates. Now, let's redirect our attention towards the interview.
I wasn't awake, but I've looked at the chart, and then it traded in a matter of 1 or 2 hours to 30.61. So an almost 9% rebound. And I think that's very strong and very significant. Gold as well. We traded to 29.70, and then during the same time frame as silver, it rebounded up to around 30.60, which is about a 2.8% rebound. Of course, is not as much as silver because gold has held up really well. It's still up about 15% year to date, while silver now is probably up slightly, but it lost 16% last week, as I told you. But what this goes to show you is that when gold and silver take off again, silver is going to be, I think, on steroids. It's going to go ballistic. Am I selling some of my gold to get silver? No. And what else is going on? Let's have a quick look at the headlines here. Well, the FT says global stocks tumble as Trump offers no respite from tariffs. Asian and European indices and U.S. futures fall in wake of worst week for Wall Street equities since pandemic. That's another problem here that I'm seeing here is this one. KKR, Blackstone, Carlyle. Big investors look to sell out private equity after market rout. Private equity is a very illiquid market because it's a private market. And I think they're going to have a really tough time getting out of their big private equity positions. And why do I say that? Well, I have a couple of very good friends that had a big position in private equity, but they've been trying to get out for the last 6-9 months. And and one of them told me that they were able to get their money on the 1st of April. just before everything kicked off, and he's very relieved. So I think that could be another big problem, private equity. And why is that? Well, because private equity, they use a lot of leverage. They use debt to buy companies, to re-engineer them, financial engineering. That's been part of this everything bubble and financialization. And I think they could be in trouble. We've got spot gold at 3,025. So it's moving around like a yo-yo. The volatility is through the roof. So as I said, the low is 29.70, the high is 30.60. Silver is trading at 29.90, so it's back below 30, but I wouldn't be too concerned because the low was 28.30. The high has been around 30.60. I mean, I have a high here of 30.80, but on the chart it says 30.60. The Dow futures is down 1,500 points, so another 4%. The NASDAQ 100 futures down 933 or 5.3%, and the S&P is down 4.7%. The FTSE in the UK is back below 8,000, at 7,600, down 5.3%. The Euro Stoxx 50 is down almost 6%. What about the currencies? Well, the dollar is very weak versus the yen. That's another thing that doesn't help the carry trade, which helps liquidity. So the yen is very strong. The dollar is down 1% versus the yen. The euro is up 0.2% versus the dollar. The pound is pretty much unchanged. And it's interesting because the industrial commodities, they are continuing to drop quite sharply, while silver is up right now 1%.
In a market rattled by volatility, liquidity issues, and mounting systemic risks, the rapid rebound in gold and silver is more than just a price move. It's a signal. As traditional assets falter and cracks widen in the financial system, precious metals return to the spotlight as trusted stores of value. Whether we're seeing the beginning of a longer-term trend or just a glimpse of what's to come, one thing is clear: gold and silver are back on investors' radars in a big way. Do you think silver has the potential to outpace gold in the next major rally? Are you adjusting your investment strategy in response to growing market instability? We'd love to hear your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates.